Welcome to the Dirt on Real Estate. This is a Utah-based podcast where we get down and dirty with everything you need to know about buying, owning, and loving your first home. We've got a packed episode for you here today. We're going to kick things off with some current real estate news. Then we're going to sit down with Casey. He's a mortgage loan officer. We're going to break down kind of what it looks like when you have that first meeting with a mortgage officer. Finally, we're heading out to tour a beautiful model home that Edge Homes has in the Lehigh River Point community. So stick around, we got lots of good dirt coming your way. All right, kicking off this news section, the Fed had a meeting on June 18th, 2025, released a statement. In the statement, they reiterated a forecast of 2 quarter-point rate cuts later this year, despite slightly raising their inflation outlook due to tariffs. In the June meeting, they did hold rates steady, and they did signal some openness to easing. That easing is kind of conditional on future data, so inflation rates that are coming up as well as unemployment numbers. Currently, it is looking like the first quarter-point rate cut will be in September of this year, with another one following later in the year. That's it for our news section today. Let's hop over to Casey and talk about some mortgages. We're here today with Casey Bentley. Hopefully I got your last name right there.
Yep.
Perfect. Casey, you work a little bit in the real estate side, but also in the mortgage side. Can you give us a little bit about your background and how long you've been in the business and kind of what exactly is that you do?
Yeah, I've been a mortgage officer going on 5 years. I think I got my license probably August of 2020. I kind of got out of high school and was trying to decide what to do. And I was actually supposed to go do summer sales, door-to-door sales. And the night before I left, I kind of started researching real estate a little bit, and it kind of just connected a little bit better. So I figured instead of doing door-to-door sales, let's go into a different commission area and learn the ins and outs of real estate. So I ended up studying mortgages, becoming a mortgage officer, how financing works, what it takes to get a loan, and it's been great for all the 5 years. And yeah, kind of like you said, I did go get my real estate license just for that further education, but my primary background is for sure lending and what it takes to get a loan.
Awesome. And you work primarily Utah County, Salt Lake. Where exactly is it that you kind of focus on, or is it just all of Utah?
Yeah, I mean, I've done loans all over Utah, but obviously I am in Utah County, so the majority of them are Utah County, Salt Lake County. There's a few up north. I've done a few deals like Cache County, like Logan, and kind of university towns, just because of the buyers that are more my age are usually looking in college towns. But yeah, pretty much wherever. So I've done a few loans in California. I am licensed in California, Idaho, Texas. I've done a few in Texas.
And if people want to reach out to you, we'll put your number and email in the show notes. And you have some social medias that you use as well.
Yeah, Instagram, it's Bentley Advisors. So you'll see the blue logo, and you'll see some of the clips of this posted on there as well. So go check that out. There's always flyers and kind of promotions and what programs are out there. They're going up on social media all the time. So I definitely want to go follow that.
Right on. Well, today we're going to mostly be talking about kind of the first steps of, you're thinking about buying your home, maybe your first home, so you don't really know what the process is. And one of the first things that you need to do actually is talk with a mortgage lender. So that's why we have Casey on today to kind of walk us through those first steps of, you've decided you want to buy a home. Now you got to find out how much home can you buy and get pre-approved and all that stuff. So that's what we'll be getting into primarily today. Casey, when somebody reaches out to you and says, hey, we've been saving up, we're ready to buy our first home, what are those first steps that you walk them through?
Yeah, I mean, there's a few ways we can go about it, but the base 4 items that I always ask, or not that I always ask, but that I need to know is the first one's credit. Do you know your credit score? And obviously I'll go in and pull your credit later, but credit score is a big one. Then the next one, and the next two, so number 2 and 3 are kind of together, is your income and your debt. So how much do you make every month? And we use gross. So a lot of people will usually give me after taxes, but we actually take the gross amount. So what's your gross monthly income? And then what debts do you have? Do you have a car payment? Do you have student loans? Do you have credit cards? And then the fourth item is how much do you have for a down payment? Do you need a down payment assistance program? Do you have money saved up? And then from there, I can kind of identify which program would be better, and it leads into all those conversations. But those four main things are definitely what is the general basis of getting a loan.
We'll kind of touch on these four things here. Credit, where does someone, I don't know, ballpark need to be? Because houses are crazy right now. So, ballpark, I don't know, what's kind of average? A lot of people maybe not even know their credit score. What do you kind of walk them through with that?
Yeah, I would say average would probably be the lowest. On average is about 680. The higher on average is like 740 to 760. And the main thing that credit does, there's minimum credit limits. So for the different programs, it depends on how low they'll allow your credit to go. But as long as you're above the minimum credit, all credit does is affect your interest rate. So if you're an 800 credit score, you're going to have a better interest rate than if you have a 700 credit score. But there's government programs that will let your credit score go all the way down to 580. I mean, a lot of people's credit's above 580. So don't let your credit be a main reason that you don't buy, because there's government programs and assistance programs that can help if you think your credit's not good enough to buy a home. But I mean, ideally, if you're 700 or above, we can get you just as good of a deal as anyone else. So that would be, I guess, if you wanted to have a goal credit area, it'd be above 700 would be awesome.
I think one of the main things of why it's good to reach out to a mortgage officer earlier in the process is so that you do know about these government assistance and programs that are going on, because they don't last a very long time, but sometimes they're awesome and they can give you a bunch of money towards a down payment or help you need less money for a down payment. Is that kind of a main thing that you have to research up on, is what exactly is going on right now?
Yeah. I mean, there's set programs out there like Utah Housing, the government entity, has a pretty stable one that we know will always be available. But the more kind of creative that might be a little bit better deal, they definitely come and go all the time. And so it's definitely one thing we have to stay up on. But with that, as far as your credit and meeting with us early on in the process, if your credit is low, I also have a way to go and help you raise your credit. Like I can go in and analyze every aspect of it and say, hey, if you pay down this credit card to this balance, it'll raise your score from 640 to 680. And that then will be a snowball effect to help you get this rate and qualify for this program. And it'll lower your down payment this much, and it'll just have a snowball effect. So all that stuff kind of factors into what programs you qualify for, how the credit works, and all that. So yeah, it definitely doesn't hurt to meet with me sooner rather than later.
One of the big things also when working with a real estate agent, one of the first things they're going to ask you to do in meeting with the mortgage officer is get a pre-approval. What exactly is that process with you? What do you walk them through with that?
Building off the four things that I've asked, I now need to verify the four things and make sure that your answers actually align with reality. So if you tell me you make $100,000 a year, but then I get a pay stub and you only make $60,000 a year, so there are loan officers that just take your word for it, and it can get you in trouble because maybe you thought you made more than you did, but you really don't because the mortgage guidelines and how they are. So my next thing I'm going to ask for is pay stubs, W-2s, bank statement, a picture of your driver's license to make sure you're a real person. And I have a list of documents that I'll email out. I'll get it all uploaded into the loan application. And so I kind of usually start there is getting a loan application filled out. I get all your personal information and then verifying all the information that you gave me over the phone and that all those answers line up. And from there, I'll be able to plug in all the formulas and be able to tell you what you can qualify for based on the national guidelines that we have set out for us.
And the importance of the pre-approval is if you're going to make an offer on a home, say you go and look at 10 or 20 or 50 homes with your agent, you go and want to put an offer on a home, 90% of those homes are going to require some kind of pre-approval letter with that offer. So it's actually a really important step to have before, let alone just knowing what your budget is. And you don't want to go and look at all these homes and then realize, you're up here and what you can really afford is $200,000 less. So once you get that pre-approval set up and you know how much somebody can qualify for, do you have any sort of recommendations or insights as to, you can qualify for say 500,000, but it would be smart to look at homes in the 300 range, or I don't know. There's a lot of different opinions on that, and some people might be scared knowing that they can qualify for a $500,000 home or more.
Yeah.
But looking at what that payment might be each month is scary.
Yeah.
From my perspective, sometimes it can be better to push the higher end of your budget a little bit, especially with a first home. What is your opinion on that?
Once I know what you qualify for, that's when I go back to them and I say, okay, there's 2 qualifications that I can send out to you. There's one where there's what you qualify for, and then there's what you can afford. And so when you ask them, what can you afford? It's realistically, how much do you guys want to pay every month? Because maybe they could qualify for a $500,000 home, but they're not gonna want to go make the payment on a $500,000 home. They're only gonna want to make the payment on a $350,000 home, and maybe they don't even need the size of a $500,000 home, and it just makes sense to start out with something smaller. And that's usually where we racket that qualification down lower, because everyone starts to see the payments and they want to keep their payments as low as possible, obviously, and then that's where we can kind of come in and find a sweet spot. One thing I really started to do recently as well is just straight up saying, in a perfect world, what would you want your monthly payment to be? And we can actually just work backwards from there. We just take what it would be and how much payment that is into a purchase price, and we can just work backwards. And I've seen that go over really well, because people don't know what a $500,000 house really costs. They just know that they want to keep their payment under $2,500. It's always the battle of what can you afford versus what you qualify for.
Yeah. So here's another question with that is, what exactly all goes into a mortgage payment each month? Because it's not just principal and interest for the house.
Yeah, it's a little tricky. There's your principal and interest, and that practically is just your mortgage, is your principal and interest. And so every month when you make, say your mortgage payment is $2,000, about $1,500 will go towards interest, $500 will go towards actually paying down the loan that you have. But then on top of that $2,000, you'll probably have about $150 in property taxes. You'll have about $100 in homeowner insurance. And then depending on your down payment, you'll also have monthly mortgage insurance, or a lot of people know it as PMI. And that'll also be about another $100 to $200 a month. So on top of just paying the loan back, you have to worry about property taxes, homeowners insurance, monthly mortgage insurance, and there's all these extra monthly fees that a lot of people aren't aware of. So that was a good question.
I mean, it adds up quick. It does. Another thing here for you, it's a long process buying a house. I don't think everyone realizes that. You know, on Zillow, looking at things to when they're actually at closing, it can be a year, 5 years, or 6 months. But typically it's a longer process than people think. How involved are you through that process from when they sit down with you the first time?
Yeah, I would say I'm very heavily involved for the majority of the process, just because, I mean, if you reach out to me 6 months before you're going to buy a home, I mean, I'll need to make sure I'm caught up on the documentation. I'll need to make sure if your pay has stayed the same. I need to make sure your bank accounts still look the same all the way up until we close. I'm going to be taking all this information, your pay, your assets, your liabilities, and I'm going to be taking it to an underwriter, and we need to have the most updated documentation. Your financial picture could change every month. It's kind of a month-to-month thing. And so I would say at least talking to me once a month as you're going through the process, just to make sure I have the updated documents and everything all the way up until we actually close on the loan and you guys have moved into the house. I'd say it's a couple months of just maybe once a week following up, making sure everyone's still on the same page and we all have the right expectations, and making sure all our information is accurate.
Well, and then worrying about appraisal and making sure that gets back right. Some people may not know that when you're using a lender to buy a house, the house has to appraise for what the loan is, right?
Yeah, no, true.
Last thing that I want to kind of touch base on here, it was kind of your step 4 was down payment and how much people have for a down payment. It can be kind of flexible, if I'm not mistaken. What do you recommend? What's kind of best practice for how much to have for a down payment?
Yeah, ideally, if you could have between 3.5% or 5% down, we can get you a great deal. If you don't have to borrow a down payment, it puts you in the best situation. but also don't let that stop you from wanting to buy a home. There are great programs out there where they'll cover your down payment, and some of them it'll add like another $100 to your payment every month, which I know payments are already high. Some of them you just pay it back when you sell the property. So there's all sorts of options, but ideally if you're between 3.5% and 5%, which is probably about 15 to 20,000. If you have that much saved up, I think we could get a pretty good scenario for you, and that would be ideal.
A lot of people right now are still saying that rates are crazy, and it does make it harder to buy a house when rates are, 6.5, 7, 7.5.
Yeah.
What's your current look at the market? Because you're looking at this every day, whereas most of us aren't, and you're doing a lot more research. What's your outlook on what mortgage rates are doing?
Yeah, it's so hard. There's so many moving pieces, especially kind of in the economical climate that we're in right now. And the one thing that's always a good thing to remember is we always say you date the rate and marry the home. If we're being realistic, the interest rate is by far the most temporary thing of the whole process. Like the home is pretty permanent. If you love the home, let's make it work. But your interest rate, if you wanted, you could change it every 6 months. Say we lock you in at 7% and rates go up. Well, you're going to be super happy you have 7% because rates are now at 8%. But if you get 7% and 6 months later they're down to 6%, we can change that and update that rate and refinance you super quick and easy. So it's kind of hard focusing on interest rates. And I'm going to be honest, it does affect your payment. Like payments are high, but the interest rate is by far the most temporary and most flexible thing in the whole transaction. So that's why it's hard where regardless of what the economy does or what rates do, let's still just get you into the home and focus on that as we see what happens, because you never know. We could change the tariffs on this day, or another COVID could come back, like a whole pandemic could start. We have no idea what's out there for us. And so let's just get you into the home, start building equity, and we'll worry about the interest rate as we get through the process and as things change and we have more information. You're right. They are all over the place every day. It's hard to track them. I'll give someone an interest rate today and by tomorrow it'll be completely different.
Like you said, when you lock in the rate, it may be 7%. So here's another question. When in the process do you lock in the rate?
That's always kind of the question. And a lot of times I leave it up to the client. As we're talking about home buying process, we kind of have the months building up to it. But when you're actually under contract, that you found the perfect house, you put an offer in, they've accepted your offer, the average is about 30 days. We cannot lock an interest rate until we have an accepted contract. So we only have about 30 days of time to lock that interest rate. So between me and the client and where they feel, a lot of times we'll go to them and be like, hey, rates are at 7%. If you guys have budgeted for that and you're okay with 7%, let's just lock it and move on. Let's not stress about it anymore, because you already have a million other things to stress about now that you're under contract on a house. But there's some clients where they're like, oh, that 7% is a little high. We want to risk it and see if they come down over the next 15 to 30 days. Then we'll let it ride. And sometimes it goes up and it was a worse situation. Sometimes it comes down and it was a good bet. But it goes back. It's so hard to tell. And it's just getting to a position where you're comfortable with it and you're confident in moving forward during that process. But you only have about 30 days to mess with the market. And typically rates don't move that much in a 15 to 20 to 30 day span. Maybe they'll go 0.25% one way or the other. You're maybe trying to save like an eighth of a point is all the battle is. So, which can be a lot, but it also, is it worth the risk? I don't know. It depends on your risk level as a home buyer. It's a good question, but one of those that I just don't have a good answer for. It just depends on every deal, and it's just part of the industry.
No, that was a perfect answer. It's after you're under contract, sometime in that 30 days, basically. It was a great answer. A lot of people come and say, oh, the feds have announced that they're cutting rates this many times this year. What does that actually equate to for what interest rates are doing?
Not as much as you'd think. So there's the Fed prime rate. When it drops, everyone thinks mortgage rates will drop. And over the last year, I would say, when we've kind of seen the Fed rate come down from 8.5 to 7.5 and the drops that they took to get there. For example, if the Fed meeting's in September and it's rumored that they're supposed to drop that rate, well, mortgage rates from June, July, and August have been already budgeting in for that drop. that then when it does drop, we've actually seen rates go up. The drop almost happens before the actual Fed drop because the market and mortgage rates start to price that in. So there's been times building up to the Fed, we're like, we need to lock right now because once they actually lower that rate, we've seen rates go up, but we've also seen the opposite. So it's not as cut and dry as people make it out to be. Like if the Fed drops their rate from 7.5 to 7.25, it doesn't automatically mean that mortgage rates are going to go down 0.25. It could actually be the inverse of that. So not the greatest thing to go off of, but I mean, it is just an indicator of where the economy is going and where we think inflation's at and the CPI index and all that.
But that's a good explanation. There's not an exact, feds are dropping, so rates are going down. It often is the opposite. Last thing that I'll touch on with rates here, a lot of people right now are saying, we're just going to wait and hopefully rates will come down in the next year or two. But often when rates come down, the prices just go right up. So you're not necessarily getting that much of a bigger deal. What's kind of your advice for somebody that may be saying, well, we want to wait for rates to come down a bit?
Yeah, I mean, it kind of goes back to the date the rate, marry the home. The rate is so temporary. We can change it whenever. So if you're waiting for rates to drop, the home prices will be higher. Utah's a very strong market, and the appreciation rates here are crazy, even through all the economical stuff we've encountered. And so honestly, a lot of times, even though your interest rate's lower, now that the home price has gone up, your payment's actually higher than it would have been at the higher interest rate and the lower price. And then if you do buy it at the lower price, then we can just refinance you like I've already talked about. And you're way better off because not only did you buy the home earlier, but now you've been able to take part in the value of that home going up, and that equity is now yours. I don't know many scenarios where it makes sense to wait, especially if you're planning to be in the home for 5 years. There's always the old 5-year real estate rule. If you're going to be there for 5 years, there's nothing to worry about. You'll be better off. Let's just get you into a home as soon as we can.
Well, and with that, the last thing I'll touch on with that 5-year rule, we don't have too much more time today, but sometimes it can be better. I know we talked earlier about what do you want your monthly payment to be? And sometimes it can be a little more beneficial to push that top end a little bit and be a little bit more uncomfortable.
Yeah.
Because in 5 years, you're going to be making more money. Maybe a spouse will be out of school and they'll be making money as well. And that home value will increase. The other thing I want to say with this is often if you can stretch the budget just a little to get into that little bit bigger house, it'll last you 5 years instead of 3 years. And then it sometimes can make a little bit more sense in the long term. Not that it's right for everyone, but it's just something to consider.
Yeah, I mean, with that, I always kind of word it like we each have our own financial fingerprint. Like how we all have our fingerprint, they're all so widely different. That's how everyone's financial picture is. Some people, it makes sense to buy the more expensive home. Other people, it makes sense to do a starter home. Everyone's different, and you'd be shocked that even with similar pay and similar credit, just based on people's mindset and where their goals are to be in 2 years, 3 years, 5 years, is how we can structure everything to make sure that we're best accommodating to your financial fingerprint. Like you were saying, may not be best for everyone, but we'll make sure as these real estate professionals, me and Will, that we'll make sure you guys are being in the best situation for your exact situation and your goals and your mindset in the industry.
Very well said. Thanks for talking with me today, Casey. Again, if you want to reach out to Casey, his info is in the show notes as well as mine is always there. If you have more questions about lending, or maybe you're at that point where you need a pre-approval, reach out to Casey. He's awesome to work with. So thank you so much for being with me today, Casey.
Yeah, this was awesome. Thanks for inviting me.
All right, we are here in the awesome River Point community with Edge Homes. This is one of their single family homes. Right off the bat from the front door, you have an awesome space you can utilize, office, podcast room, and then we walk in to this awesome open concept living room, kitchen, We've got the fireplace, and really the best part about this home is just how they utilize the views. Windows nearly floor to ceiling. Amazing view of the Wasatch Mountains, which we're so known for here. Kitchen, it's everything you need. It's functional, it's beautiful. Off the back here, you've got a half bath, leads to your garage, little mudroom, as well as walk-in pantry. That's it for the main floor here. When we walk upstairs, just off the top of the upstairs here, we have this wonderful little TV nook, as we like to call them. Great space to just hang out with the family. And then we move on. You've got full bath with the tub shower insert here. Great quartz countertops. So from the bathroom, we make our way into these great kids' rooms on the right. In these rooms, there's plenty of space for everything you need. You got space for bed, desk, you've got great closet space here, double door closets. And it's the same in this room here as well. And then we make our way, this huge open, I'll let you walk in there. Awesome space for a laundry room. It's got all the cupboards, counter space that you need. This makes our way into the primary bedroom. Tall ceiling concept makes it feel just absolutely huge. And that's one of the things that Edge Homes actually does really well. Is they utilize the space in their concepts and designs in just a great way. We have the ensuite primary bathroom here with a massive walk-in closet. You've got your great soaking tub, shower right behind us here, and then a little potty closet, as I like to call it. Another amazing thing about this second story of this home, with the laundry on the second floor, with the bedrooms here, you don't have to worry about taking your dirty clothes and hauling them up and down the stairs or trying to get your kids to take them down to the laundry room. It's all on one floor, makes it really convenient and just easier for living. So we're here with Nate with Edge Homes. Nate, tell us a little bit about this River Point community.
Yeah, well, we are just south of 2100 North in Lehigh. We've got single family homes in this community as well as townhomes. Prices are going to be starting in the high 400s for the townhomes, and for the single family homes in the high 500s. We've got an awesome clubhouse and pool, pickleball courts in the area, parks, all that kind of stuff. It's a great community.
Awesome. Yeah, you really can't beat what Edge is putting into these communities, especially with the pool and the clubhouses. Edge has incentives that go on throughout the year, right?
Yeah, so Edge offers some incredible incentives. Depending on when you come in, they may be different, but they are awesome. You can use those incentives to buy down interest rate or lower prices, things like that, to really make it so buying a home is more affordable.
Perfect. All right, thanks, Nate. Thank you guys for watching The Dirt on Real Estate. Please give this video a like, comment, subscribe. All of that really helps us out. As always, if you guys are looking to buy or sell in Utah, or if you liked the home that we looked at today and you want to go see it yourself, please reach out to me. My number and email are down in the show notes below. We'll be back next week with more dirt.